This last video is going to cover the pro forma financial statements for problem 1423. And this will be, when we go through it, parts H, I, and J. So we start with the pro forma income statement. So the first thing we need is our sales revenue. And we're going to find this sales revenue from our sales budget. So we come all the way back to parts A and B, sales budget. What are we going to find for our sales revenue? Well, when we look at it, we're going to use this part B, 1,655,000. That's what we're budgeting for total revenue. So we're going to put that in here, 1,655,000. Next, we need our costs of goods sold, and this is going to come from our purchases budget. So we find our purchases budget right up here. What's our budgeted cost of goods sold? That's going to be this pro forma A, that 827,500. So those are our expenses. So our cost of goods sold is going to be the 827,500, which, if you remember and recall from previous videos, they told us that our costs of goods sold are half of our sales revenue, or 50%. So that makes sense that our gross margin is the same thing. We now need our selling and administrative expenses, which obviously is going to come from the selling and administrative expenses budget. Find that. Our total selling and administrative expenses, when we look at not the cash payments, but we look at what we're actually budgeting for, that's that 444,600. So that's, again, that's an expense, so that's going to be a negative here. So when we complete that, we find our operating income when we do that subtraction. When we do that, we find that our operating income is 382,900. We now need to find our interest expense, which comes from our cash budget. So my interest expense is going to be this operating activity of 26,498. And again, that's an expense, so we subtract it. When we do that subtraction, we end up with our net income of $356,402. So that's your pro forma income statement. Next, we do the pro forma balance sheet. All right, so we find our cash amount, our cash budget, with looking at the cash budget. What's my ending cash balance? This $1,000 or $100,000 right there. So on this sheet, we're going to put that $100,000 from the, I'm just going to start abbreviating, cash budget. Accounts receivable, this comes from our sales budget. So come way back up here. What's on my account still? 423,500. So that's the amount we're going to put under accounts receivable in that balance sheet. And that's a 3. Inventory, that's going to come from our purchases budget. We go up to our purchases budget. This is why we do them in this order, and they're all connected. Our total inventory is going to be part B right there, 66,000. That's what we desire to have in our inventory at the end of March. And then we've got our store fixtures and our accumulated depreciation. These two both come from the selling and administrative expenses budget. I'm just going to put SAB for selling and administrative budget. So we end up with our store fixtures. We knew that they are 700,000. We can take that from our cash budget, but then we look at what we have depreciated, which is 30,000. So our store fixtures, we know, started out at 700,000. They've depreciated 30,000, which means we have $670,000 left. And when you add those up, hopefully they equal 1,259,500. That's what I get. So hopefully yours do too. All right, so now we need to get our accounts payable. We did our accounts receivable, so now we need accounts payable. And accounts payable come from that purchases budget because we owe on our purchases. Let's go find our purchases budget right here. So what do we still owe? Well, here's our required purchases on account. We still owe that 40%. So this part C, the 123,200. Our sales commission payable is going to be on our selling and administrative expenses budget. So we come back up here. What do we still owe for our sales commission? That would be the sales commission of 48,400. That was part A for the sales commission. So we still owe 48,400. Our utilities payable, again, that's coming from your selling and administrative budget. So our utilities payable, we still owe that 36. That's part B. And then we've got to figure out what our line of credit liability is. And that's going to come from the cash budget. So what do we have left? We've got that 727,898 from part E left. So our line of credit, 727,898. And then the last thing we need is our retained earnings, which again, because this is the first time period, and there are no dividends or anything else that we're paying out, our retained earnings equals our net income or net loss. But we have a net income from our income statement of 356,402. So we're going to put that right here for retained earnings. So then when we add all of those up, we should hopefully get the same as our assets. And I get 1,259,500, which equals my total assets. So the accounting equations of assets equals liabilities plus stockholders' equity is true. And then the last thing we need to do is fill out our pro forma statement of cash flows. So to do this, we are again going to use our cash flow or cash budget. And when we use our cash budget, we're going to look for our receipts from our customers first. So we see that we bring in 1,231,500. So we're going to use this one right there. So again, that was 1,231,500. All right, so again, these are all operating. So now we go find our inventory, our selling and administrative, and our interest expenses. So that's going to be, we used A, now we're going to use B, C, and F. So the 770,300, the 362,600, and the 26,498. Those are, again, my operating expenses or operating activities. So we come down here and these will be negatives. So we put them in at 770, 300, 362,600, and 26,498, because that's what we are spending in cash. And when we take 1,231,500 and subtract those expenses, I get not that number. So what did I do wrong? Would help if I put the first number in correctly. I did 234. Now I get the right answer of 72,102. All right. Cash payments for store fixtures. Those store fixtures were, again, right up here. Our investing activities of 700,000. And that's a payment. So that's a negative number. And then our net inflow from our line of credit is going to part E for our financing activity. We've used it already, but we're still using it again on our cash flow statement. So that's 727, 898. And that's an inflow. All right, so now we need to add these up. So take the 72,102 minus the 700. And then add the 727, 898. And I get an increase in cash of $100,000. Plus the beginning cash balance, which was 0, gives me a final of $100,000. And that is the last part of problem 1423.